Welcome everyone to Vested Interest. This is Shane back for a stock pick of the day video. It is June 3rd. We're going to take a look at one out of the consumer staples sector. This is Kenvue. This is a spinoff from Johnson & Johnson. I think it was a couple years back now. Before we get too far in the video, if you could do me a big favor, all of this really does help out a small YouTube channel like mine, and it doesn't cost you but a couple seconds. Make sure you hit that thumbs up button down below and click the subscribe button. Join us on this journey to financial freedom. Join the Vested Interest community. Click the subscribe button if you have not done so already. Hit the notification bell so you're notified whenever I put out any new content. I do this stock pick of the day video series Monday through Thursday when the market's open. We take a look at a company that stock has pulled back on the day, run it through my screener, see if it makes it on my watch list. And even if it does make it onto my watch list, that does not necessarily mean I am buying. It just means I am interested in doing more of a deep dive into the financials of the company. This is just an initial screener. It is not a deep dive into the balance sheet or the income statement. Stuff like is their revenue growing? Are their margins expanding? Are they paying down debt? There's a lot more to look at in the financial statements, their balance sheet, their income statements, than this high-level screener. And a special thank you to all the viewers and subscribers of the channel. The channel continues to grow because of people like you. And for those of you who may be interested, there is the thanks button down below if you would like to help out the channel financially that way and buy me a cup of tea. All right, this is the vested interest stock screener. This is the criteria we will be running through in the video. It must meet 5 of 8 to make it onto my watch list. If it was a financial company, we'd add in price to book with 1 being fair value. Don't blindly use 1 for fair value with price to book for companies outside the financial sector like banks and insurance companies. That is specifically for those companies. You can use price to book for any company. Just make sure you're looking at its historic average and compare it to other companies in the same sector doing the same type of business. Back to Kenvue. Check them out on their homepage, where you can learn more information about them. www.kenvue.com. That's www.kenvue.com. That is their homepage where I pull this information from. From gently cleaning tiny fingers during a baby's first bath to protecting the vitality of your skin to soothing aches and pains, our products deliver safe, effective, everyday care at every stage of life. And you can see some of the brands underneath their umbrella here: Tylenol, Listerine, mouthwash there, Neutrogena, Band-Aids if you need those. I know I've got a bunch in my house. I've got 2 kids. They seem to always need a Band-Aid. Motrin, much like Tylenol for pain. Aveeno, Zerabes, Johnson's, Zyrtec. I use a lot of Zyrtec this time of the year. My sinuses are kicking my butt, actually. Benadryl, Nicorette. You may recognize a lot of these names. These are a lot of the brands that were spun off the consumer staple portion of Johnson & Johnson, so they could specifically stick to the drugs, over-the-counter medications, and those sort of things. So these are the brands that they spun off and now stand under the Kenvue name. Now, the reason we are taking a look at them, down 6.17%, big drop on the day. We are talking about Kenvue Incorporated, ticker KVUE. Again, this is a spinoff from Johnson & Johnson. It is out of the consumer staples sector. Closed out the day at $22.22. 52-week range as low as $17.67, as high as $25.17. They are not within 15% of their 52-week low. They need to drop under $20.32 per share. Market cap of $42.747 billion. So small cap company here, beta of 0.93, so just slightly less volatile than the overall market. PE ratio $39.76 per share, seems very elevated for a company like this. Earnings per share, EPS at 56 cents per share. Earnings date coming up sometime between August 4th and August 8th. Forward dividend is 82 cents. They are a quarterly payer with a nice starting dividend yield of 3.46%. Ex-dividend date, May 14th. We are past that. They did pay out on the 28th. So if you were to buy them now, you would be in line for the next dividend, but you are going to have to wait several months to get it, or a couple months to get it here. 1-year target estimate, at least according to Yahoo Finance, where I pulled this information from. I am not affiliated with Yahoo Finance, just a place I go to for information. 1-year target at $24.75 does give them some potential upside, but not much, and doesn't get them quite back to their 52-week high. Jumping over to the right, I like to look at dividend yield theory. Unfortunately, because this is a recent spinoff, we do not have 5 years of history to really look at, so we can't look at that one. But the payout ratio, I will note, is very elevated at 145.54%. I do not like that it is that elevated. Dropping down to free cash flow, I want growing free cash flow over time, because typically if a company has growing free cash flow, they can do some things with that. They can pay down debt, make acquisitions, reinvest back into the company. They can keep some of that cash on the balance sheet if they want. They can rebuy shares. Looks like they are doing that. They can pay a dividend, this company does, and they can raise that dividend over time, which is what I like to see as a dividend growth investor. So we want growing free cash flow. Going back to December 2022, you can see 2.1 billion in free cash flow. 2023, 2.6 billion. 2024 looks like we had a drop down to 1.3. Trailing 12 months at 1.4. So it looks like a bit of a drop, at least since 2023 over the last couple of years, in a downtrend. Though again, this trailing 12 months does include a lot of 2024 numbers. And actually, it is up slightly. But repurchase of capital shares, nothing in 2022, 7 million in 2023, 235 million in 2024, trailing 12 months, 207 million. But again, trailing 12 months does include 2024 numbers. So we'll have to wait to see how the rest of 2025 shakes out, really, for this year. All right, jumping over to stockanalysis.com, another source I go to for information. Again, not affiliated, just one of the other sources I go to, and I do recommend 2, if not 3 sources, so you can make sure the information you are looking at is accurate and up to date. Now, they have 12 analysts that have taken a look at this. They call it a consensus buy. Low estimate of $23. That would represent a 3.14% increase from where it currently sits. Average estimate of $25.33, pretty close to what we saw with Yahoo Finance estimate on the previous page. That would represent a 13.59% increase. And if it happened to hit their high estimate of $29, that would represent a 30.04% increase. And you could collect that 3+% dividend yield along the way, so long as they didn't cut it. Seems like it may be elevated. Now, I like to look at the statistics and look at return on capital employed as one of the metrics I use on my initial screener. I like 10% or better. They're above that at 14.8%, and I like EPS growth forecasted at 5% better over the next 5 years. They're at 23.33%, smoking high on forecasted earnings per share growth. All right, as we mentioned, quarterly payout ratio very elevated at 148.68%. Dividend growth, they're saying at 2.5%, so they are growing the dividend. Though I question if should they be growing the dividend, and maybe paying down debt would be a better use of that. 2 years of growth. Buyback yield is negative at 1.22%, so they are not being very effective or efficient in buying back shares. They are issuing more shares than they are pulling out of the market. That's why that is negative. Shareholder yield is positive at 2.48%. They do pay out off schedule for most companies, February, May, August, November timeframe. Going back here to 2023, whenever they spun off there, they were paying 20 cents. They raised it up in August 2024 to 20 cents and some fractions of a penny there. And if they're going to maintain that, we should see it sometime in maybe August again, 2025 here for their next raise. So let's run it through this. Let's run it through the screener. Jumping back over to the screener, understand the business. They're pretty easy to understand. Again, a lot of products that were used to, or that used to be under the Johnson & Johnson's brand have been spun off. It's really their consumer staple stuff, some Band-Aids, Listerine, the stuff you might buy, maybe not every week, but you're probably going to buy whenever you run out, right? Use mouthwash, use Band-Aids, use Tylenol, Motrin, Zyrtec. Again, I know I use it certain parts of the year in the spring and in the fall, especially whenever the flowers are all blooming and the cottonwood trees right now are going crazy. The cottonwood trees kick my butt, so I live on Zyrtec D this time of the year. So I'm very familiar with their products. Growing free cash flow, no. We had at least one down year. Growing dividend, I would say yes, they're growing the dividend, but question, should they be with such a high payout ratio, because it is not under 75%, so no check there. Dividend yield theory we can't use because they don't have 5 years of data. It is not within 15% of a 52-week low. Return on capital employed is over 10%, and earnings per share growth was in the 20% range, so check there. So we're looking at 4 out of 8. It doesn't quite make it on my watch list. I've looked at this company a couple of times, and it doesn't quite seem to be there quite yet. I'd love them, like I said, to get 5 years of data, so maybe we can use the dividend yield theory or get their payout ratio under control. That would put them in the range there where we could at least get them on the watch list and do a deep dive. And you can do that anyway. If you want to do a deep dive into the company, just because it doesn't make it on my watch list doesn't mean it can't make it onto your watch list. But for me, not quite there. Well, that is really it with this one. As always, appreciate you stopping by. If you haven't done so already, don't forget to show me some love. Hit that thumbs up, ring the notification bell. Most importantly, subscribe to the channel. Join us on this journey to financial freedom. Join the vested interest community. I do personally read and respond to the comments. I'm always interested to read your questions, opinions, or suggestions for future topics. And I did make a bit of a mistake yesterday. Whenever I was editing a video, I left the top banner on that said, what company was it? I was doing a video for General Mills, but I left Tractor Supply, I think was the name of the little banner at the top. All the numbers are good, but there is when I break up that one slide there, I have to break it into 2 chunks because on my computer screen it doesn't show the whole thing. So apologies for the mistake on that one. The numbers were good on General Mills. I just left the banner at the top of that said Tractor Supply. So again, apologies for those. A lot of times I don't go back and redo videos. I make mistakes. I'm going to own my mistakes. I'll point them out to you. It was caught by one of the viewers, so appreciate that. And if you see something in the videos, go ahead and put it in the comment section. Correct me if I'm wrong. I am not above reproach, and I am not perfect. I will get things wrong from time to time. So definitely drop a comment down below if you see something that I had said or that I list that is incorrect. Make sure you're correcting me. That's part of the channel. I want to be as transparent as possible, but again, I'm not perfect. I don't claim to be perfect. No one is. But I appreciate everyone who's taking the time to watch, comment, and like the videos. And again, special thank you to the viewers of the channel. You guys and gals are awesome. And this is Shane signing off, wishing peace and prosperity to you and yours. And remember, financial security comes to those who take a vested interest. Hey, thanks for stopping by. Thanks for tuning in. Hope you have a great weekend. We will see you in the next one. I'm not a financial advisor. Nothing in this presentation should be considered financial advice. I'm only sharing my opinion. Investment journey for educational and entertainment purposes. Investing involves risk and handles money. You never invest any amount. You're not conclusion. Always do your own research. Invest based on your situation, circumstances, and select criteria, or seek the advice of counsel of a certified financial advisor. Hey, for those of you who made it to the end, really appreciate you watching to the end. Don't forget to hit the subscribe button, the like button, share with anyone who would think they might find value in the content. Drop a comment. Let me know what you think. And again, thank you for watching to the end.